everyone, welcome to the stocks and index review. Starting off with NASDAQ. Alright, so our week has been choppy AF, okay? It's been real gross. And the grossest part of it was when interest rate hikes came out for another 0.75% in the United States on Wednesday. And as you can see, that's where we got all this bullshit. Pardon my language, but that's exactly what happened. All right. So let's see what the moves were like. All right. When the rates came out about, I want to say 2 p.m. Eastern, right? Let's just move the chart over here on the 15-minute time frame. So 2 p.m. Eastern, you can see, oh wow, it starts moving up, and then there goes the crap hole, right? Down the toilet. So we gained, let's say from here to the peak, it went up in about half an hour, approximately 200 pips, and then for the remaining time the market was open, dropped 521. So within the span of, how much time was that? Let's just do quick. 2 hours, I believe. An hour and 40, yeah, 2 hours. So within 2 hours, the market moved 750 pips. 200 up and 720 pips. Okay, 200 up and 520 down. So not a fantastic day overall. But like I said, right, that first 30 minutes, that's where you get the fake outs to happen, and then the real direction ends up going. Like I was mentioning in the last video, that's what you want to keep an eye on, right? What did I say? Keep an eye on what happened the last time interest rates went up. Pardon me. You had 30 minutes of crazy movement, and then finally it decided to go in one direction. All right. Thursday, not a whole lot happened. Market just closed a little lower than what it was. Friday, you know, a little bit of nonsense here, but market closed higher than when it closed off. So overall, from where the market closed off on Wednesday, that's more or less what we were seeing on Friday. Okay. Right now, what's going on? It's sitting just under where the market closed. I think we're down maybe like 20 points. Right, so if we see that, 36 points. Okay, I was a little off. Okay, so let's jump into the long-term chart here just to see where we're sitting. Where are you? Here we go. All right, pop that on the daily, and let's take a look. So, I mean, I said this briefly in the Forex video, but I want to cover it here in more detail. You see the boxes that I had, and then I circle with the highlight. This is what I was expecting to happen in the last few weeks, right, leading up to Wednesday. So as you can see, the last moves brought it down into this range, into between this golden line and this aqua, and it bounced here for approximately 6 weeks, 5 weeks, 6 weeks. Okay, 35 days, 5 weeks. Jeez, my math is terrible. All right. And then it finally broke upwards, retested again, and finally continued on to its target area. But what I see happening here is it hit its target already back on the 13th of October. It started going up, right? And now it's pulling all the way back. And it didn't quite hit the lows of the 13th, but it came close. Okay, originally I had this green marker up here. I believe that 618 retracement plus this golden line was a giveaway and where it's going to be bouncing off of. And sure enough, I mean, can't really fault me for that, right? It was still like a 600, almost a 700 point gain in, what, a day and a half, pretty much, 1 day, right? From the previous day where it closed off up at one, yeah, so I guess a day and a half, right? The end of the day followed by the next one. So it was pretty good, right? The issue was that market didn't really do a whole lot for a couple days later, right? Which was the beginning of last week on Monday, Tuesday, and then Wednesday it just dropped finally, leading into Thursday and Friday. Thursday, really not much. Friday just kind of recovered slightly. So we're starting off here a little bit. But now let me take you to the 1 hour time frame here. And again, I'll zoom in, and you'll see what I'm talking about here. Okay, this big red candle that we had on Thursday, what was that? Right, we want to take a look. So what we'll do is jump on the news quickly. So what we had happen on November 3rd, right, which was on the Thursday, is right here. So 6 a.m. my time Thursday, oh sorry, October 13th. I gotta go way back. So Thursday, October 13th. Okay, so let's find that day quickly. Boom. Okay, no, we don't need that many. Oops, not a year back. Apply. All right, so Thursday, October 13th. Boom, here you go. CPI data. All right. So the CPI data was what caused that big drop, followed by the move upwards, right? Where we hit our low quickly and then reversed. So not great. This means that consumer price index is increasing. What that means is inflation is still rising. Okay, not great. So core CPI, CPI year over year, CPI month over month, whatever. Overall, doesn't matter, numbers were going up, right? So because of that, we had that sharp move down at 6 a.m. my time, so it would have been 8 a.m. Eastern. It's still an hour and a half before markets open, right? But as you saw, that first hour dropped hard. 7 o'clock, you know what, little recovery. By the time markets open, I'll put it on the 30 minutes now, just to show you, okay? Okay, so now 8 a.m. my time, right? Markets opened beginning of this candle. So right where the bottom was, markets opened and then they started climbing. So by 9 a.m. they recovered that entire loss that started at 6 o'clock in the morning. Okay, and then they kept going up. So they retraced a little bit, right? As you can see when I take it back to the 4 hour, because I like doing 4 hours on long-term charts. They make a lot more sense. But you know, when I see big moves, I typically zoom in. Either way, on the 4 hour, 1 hour, like you could see, it was almost parallel. So it went up and it pulled back, right, to the 50%. I'm like, ah, that looks really good. But what I also did is I drew a fib, okay, and I saw that it just crossed that 618. So that was the essential. Excuse me. That was the essential pullback that I'm looking for right before the market starts to climb higher, okay? And that's exactly what ended up happening. Now, this 50% was in play. This Fibonacci was in play. This was the perfect time to jump in on any trades for buys and hold them for several days, all right? And we could have peaked about a week later. But either way, what ended up happening is, yeah, a little bit of pullback and it went back up. So watch this, right? So another fib. From this low to this high, draw it across. Look at that, 618, right? It's magical how this works out. And once there's one 618, the second one happens. I don't want to say it's guaranteed to happen, but it's very frequent that there is a second Fibonacci that gets retraced. Right, especially when you've seen on a structure or a level that your targets get hit like they were right here. All right, so from the low to the high, you saw the sharp pullback coming. So once a peak gets hit and then I see a sharp pullback coming like that, I'll draw a fib and I'll be like, okay, that was the peak, that was the low, where's the 618, chilling out over there. Here's my big institutional play where we have a big down followed by a big up like this within one day. Boom, here is my entry. Beautiful, right? Up we go. So anyway, moving on. Look what we have here, right? Over the last 2 days, Thursday and Friday, all sitting on that 50% of this institutional play. Okay, so that tells me two things. Excuse me. Right, those two things are, doesn't seem like market makers want to take it lower than that right now. Okay, because if they did, they would be breaking their positions there. What they're doing is they're setting up certain stocks to drop lower than what they were here, but they don't want to take the overall market lower. right? Before those stocks are kind of bottomed out for this particular leg of the run. Okay, so when we jump into certain stocks, I want you to keep that in mind. Thursday, October 13th, what happened here, the lows, and the final low right here, Friday, November 4th. Okay, so the difference between the two, and let's go by percentage, okay? I'm not going to worry about that. From those two lows was 1.6%. Okay, so now we're going to go the difference between certain stocks and where we see the lows, right? Where was the October 13th the lowest point, and where was the lowest point on November 4th? All right, so that's what I see. In the short term, I still believe this is going up. The only way I'm going to think that it's going to be dropping lower is if it breaks this low here. Okay, and that means that the market has to drop approximately 409 points at least. Okay, so it's definitely possible. I mean, we had a 500 or 700 point drop happen in a couple hours on Wednesday, so who's to say it won't happen again? I just don't believe we're there yet. Anyway, so let's jump into a couple stocks of my choosing, right? Still, like I said, guys, pick and choose and tell me which ones you want to go over. I'm more than happy to dive in. I just need some guidance and some likes and dislikes from you guys, right? I'm still picking things that I find interesting, but I will jump into Triple Q right here and see what's going on. I know there's an option crowd that likes to trade that, so I'll dive into it quickly. But let's take a look at Apple for a second. Okay, remember what I was saying? 13th and 4th, right? 13th, right? See where the bottom is? See where the bottom is on the 4th? It's identical. It's the same. Okay? If it would have been bottomed here, that would have been a little better, right? That would show that, hey, Apple wants to recover much quicker than the rest of them do. But right now it bottomed out. I don't believe that it's going to be dropping lower. This was the time where some market makers want to be grabbing this stock. We're going to be seeing a run up possibly to the 150s, maybe even the 155. I don't think it's going to go higher than that. Okay, there is... like the only gap that I see it close is hit between 160 and 163. That's maybe the highest I could potentially see this going. But definitely it'll close off the 142 to 144 gap. And yeah, maybe make a little run up. So Apple from, let's say, jumping in right away on Monday, the most I can see this going is maybe... well, let's say the most, right? The most I can see this going is 17 to 18% upwards. The least, maybe 10%. Okay? Apple's pretty resilient. I have a feeling that they'll do well in the next few weeks anyway. AMC, just for fun. Okay? I don't believe we're going to be doing a run-up, even though earnings are coming out on Tuesday. Excuse me. But I want to take this into account, all right? The reason why I circled these bottoms here is because they're running alongside one of the Fibonacci retracement lines, right? Some of the channel lines that I drew up a long time ago, and it's for this entire chart, right? So if we go on the weekly time frame, you can see that it spans years, right, that channel. So it's been hugging that channel for quite some time, like you can see on the weekly time frame, right? It just wicked off there and went back up. Wicked off, right? Finally wicked off there one more time. So what I can see happening now, all right, is a short play upwards. Now, earnings could be the catalyst for a lot of people to jump in and, you know, wreck the retail traders. But, you know, as far as how high this is going to go, if we do a simple Fibonacci retracement, which I have here, the highest potential I can see AMC going is probably to $12, which means, I mean, again, it could have a potential run-up of anywhere from 97 to 120%, right? So very nice short-term gain, and I believe that's the last one we'll see for quite some time, right? Earnings reports are typically catalysts from what I've seen, right, to take stock and move it quickly in either direction, right? But you can see how many earning reports they actually are used to do something sharp like that, right? This one, nothing really too exciting. It dropped, let's see, 11%. That's not great, right? Like it went up and then dropped the next day, so pretty rough. Okay. It would have been all the way from here to the next day. So yeah, 11% in one day. Not great the day after earnings. Okay. This one, not really a whole lot happened, right? And then it had a sharp move up. What was it? A month later almost, right? March 28th, 4 weeks after. So, I mean, it's completely earnings aren't really relevant for how the markets want to move this particular stock, right? This one, yeah, I mean, it had some volatility, it went up and then sharply down the next day. But what we see is let's add up the days after earnings, right? So here we had 28 previously. So let's see what 28 looks like here. There you go, right? So it gapped up. And then for the next week, it made a run of how much? 20%. So not too bad, right? And then, overall, like I said, we're not going to be seeing a crazy amount go up here. It's just this is the only thing that I could see as a catalyst for it to be shot up here and then finally dropped back down to oblivion, right? So 2 ways to play if you want to hold long term. This is a nice low to be able to snag it at. If you're going to be looking to grab puts, aim around that $11, $12 mark, and take it like a couple months out. I have a feeling that you'll make a ton of money. Anyway, that's that. Let's go into another few favorites. I don't really like BlackRock for anything they stand for, but hey, you know what? They still make people money, right? So here we go here. What do we want to say? October 13th, right? Look where that low was. A huge earning day, followed by November 4th. Okay. Massive difference. Okay. We were saying how much? 1%, 1.5% originally. This is 28% up. I would say that BlackRock's a pretty safe bet to take a couple calls with. Just saying, it's showing exactly how this is moving. Although I do understand that this isn't part of NASDAQ. It is more of New York Stock Exchange, so that would be more like the Dow Jones, right? So we'll go into that in a second too, right? Like I'll show you here the Dow and BlackRock. I mean, they're almost identical. So anything on the blue chips on the Dow itself, it hasn't been moving down at all compared to NASDAQ. Like this has been up the entire time. So when I see NASDAQ kind of going the opposite direction, makes me wonder what's going on, right? Because typically they coincide with each other, right? So if we see, and I'll do the split screen this way, and then oh man, I hate how it goes white, but whatever. Dow Jones Index, okay. Let's zoom in on the daily. Okay, so we see here. All right, this is pretty much how it's been going. Similar to IXIC, so NASDAQ Composite. All right, you can see for the most part where the valleys are, they're almost identical, right? I'm trying to make sure it's, yeah, so you can see my crosshair. Yeah, more or less okay, right? So you can see when one's moving sideways, the other one kind of slowly starts dropping, but overall they do follow the same pattern, right? Look at the consolidation here, and look at the consolidation on NASDAQ, right? Almost the exact same. And then the drop off for both, and then same kind of peaks and valleys, and then peaked. Look, a little rally of a peak, still dropping to its lows, another little rally, finally dropped off right there. We see that big green candle on both NASDAQ and Dow Jones. But now Dow's been climbing, and NASDAQ has been going sideways and dropping. So something's a little bit screwy. All right. Not sure which one is going to be the favorite to play for a bigger climb, but I have a feeling that Dow Jones, when the CPI report comes out, that's when this will catch up to NASDAQ, right? Then they'll follow their respective paths. So that's the only screwy thing that I've seen, right? That Wednesday report really made no difference for the Dow, right? It was definitely a drop, but not like it was for NASDAQ. Okay, let's go back to the other one. So there we go. Carnival. I know I've been tooting this one's horn, but I just want to explain to you, right? October 13th, where were we at? Right here. It wasn't even the lowest. It was the lowest on the 11th, right? But look, October 13th compared to where it's at now, right? The Thursday, the 3rd, right? It's still up 20% from that low. That's why I'm sticking with this. Like I said, my average is around $7. I'm happy, right? I'm not going to worry about it dropping a couple of percentages. It went up. Now it's sitting at $9. The unfortunate thing, it always opens nicely and it has like 4 or 5%, and then it drops and it touches the negative and then it starts climbing up again. It's kind of a roller coaster at times. I don't like it, but what I'm looking at on the daily, the EMAs are still moving upwards, and I can see they're about to cross that 55. So looking good. You know, if they cross the 55, I'm going to be looking at something like this, and then if there's a sharp move back down, then I'll get rid of the actual stock for the temporary period. Overall, I do want to hold it. I have a feeling that it's going to hit maybe between $10.50 and $11. I don't think it's going to hit that line once again, because you can see it hit it once and just wicked over it and closed on it, and then it just the wick touched it the wick touched it the first time, and the second time it came close but didn't touch it, right? So I have a feeling it's going to be around this area. So maybe 10.50, 10.60 for me. That's going to be a safe spot to sell, and that's where I'm thinking the NASDAQ run will be coming shortly to a close, right? But if the NASDAQ target hasn't been reached and Carnival is at that stage, I'm going to hang on to it for a little while longer. Maybe even sell half the positions and see where the rest go. Okay, COP. This one, I predict that it's kind of overbought at this point in time, right? So a fib extension shows that it's kind of sitting in the red zone. It just entered it. So I believe it's due for a pullback. Okay, and similar to what we had here before, right, where we went from low to high, right? It went down at about the 50% and then reversed. So judging from what happened in the past, let's say something like that similar will happen. Maybe between 118 and 113 is where it'll drop down before it reverses and goes higher. Okay. I did mention oil stocks. Man, I can't remember all these videos back in August, end of August, maybe beginning of September, that, you know, around here, July 4th, August, where was it? Yeah, it had to be around the July-August mark that they weren't going to go much lower than this. Right, I just couldn't see it happening, because I do remember originally I had ConocoPhillips around the $84 mark. It was right here, right about there. Okay, but yeah, I mean, I sold it for profit and I grabbed some other stocks. So overall, this climb right now, 55%. So playing around, buying and selling a few stocks. If I would have just held on to ConocoPhillips, that would have been exactly the increase that I've had over the last few months, right? So I'm up about 56%. ConocoPhillips itself, like if I would have sold it on Friday, 62%, right? But then again, most people that do short-term swings don't hold for, how long was that? For 3 months, 3.5 months, right? But again, I was saying all this time, right? Oil is definitely a safe bet to grab. There's no stopping this right now. There's such a what do I want to say that sounds polite? Yeah, I'm not going to say much. There's a lot of stupidity surrounding oil right now. And judging what OPEC has done a few weeks ago, if you guys remember, it's limiting the supply it's producing because prices are so high, meaning they work less hard and they make the same amount of money, right? Why not? And really, it's up to the domestic supply to produce more, but politics kind of gets in the way of those things, doesn't it? Anyway, moving right along, Disney. Let's see how it looks like. So, October 13th, February 4th. So it's still higher than what it was at that previous low, and by 8.5%. So pretty decent bet. It's not going to go much lower than that. DocuSign, man, this has been a bummer. Luckily, though, when I saw that it didn't go much further past 49 and it started going down, I'm like, you know what? I'm going to cut it where it's at right now. I don't feel comfortable with DocuSign at this point. Honestly, I didn't think it was going to go much lower than 47, but this is a gift that keeps on giving, I guess, right? Especially to puts. But around my next target was about 35, right? So once it hits that, that'll be a good opportunity for definitely a long-term purchase. But every time that I see earnings come out, earnings have been decent, except for this one right here. That was a super blunder, right? So they estimated an increase, slight increase, nothing really surprising over there, right? So it's still tanked though, but it's bringing the value down of a lot of the companies. I think the outlook was looking pretty grim. And then this one shot up, right? So who knows what will happen this time? If you want to take a risk, by all means, December 2nd is reporting day. So yeah, we'll flag that. Maybe we'll take a look at that later on. Anyway, what else? Google. Google is definitely not not on my radar for a buy, right? So it's down. It was down 12%. Ugh. Not great, right? Earnings really took a big nosedive. So yeah, what we can see happening with this though, Google's not going anywhere, guys. So just not sure where rock bottom is going to be on this, but a good indication would be is if there's an EMA shift, right? And if there's an EMA shift, it finally starts going up. That'll be a pretty decent time to buy because every single time that I see going up, the run lasted for several weeks, right? I mean, this is the only exception where the EMA shifted kind of briefly here, and then it went sideways, and then it went a little higher, and then it tanked right before earnings. Okay, so let's see. How long was the run? So if it would have gotten right here at the end of that candle, you know, pretty decent 8%, I guess, over the span of what, 2.5 weeks. That's not fantastic, but it's not bad, right? And then it started dropping off. EMA would have shifted down here. So realistically, it would have just been like a 3% gain, maybe 2. Not great. Okay. The other times where EMA shifts upward, so you can see right here it shifted up. It opened way up here the next day, so up 10%, but that was earning day. Okay, so you can see it was already poised on going up, just kind of followed trajectory. But every time it, here's another one, shifted up, right? Would have gone at the end of that candle, not a huge gain. Okay, but the shift's down. So EMA shift down, watch carrying it all the way until it goes here, right? 18% on the drop, right here. Grab it when it dropped, right? So it would have been at this open. Oh no, down 1.5%. And then it shifted right here, I guess. So 13.3%. This would have been the next stage to get out, 9.5. But if you stuck with it, you know, 28% drop. That would be great for puts in the span of 73 days. So 2 months and a bit, 2 months and a week and a half. 2 months and 10 days, 13 days, whatever you want to call it. Pardon me. Okay, Google, I think it's still got a ways to go before it's worth buying. Meta, right? Meta is the one I want to jump on around that $100 mark around here. But after it went down to 95, and I'm like, you know what? I don't think this is done dropping. I'm going to take the loss on this guy. You know, it was a small position I had. That's fine, right? I just did not see this tanking as hard as it did. But I guess Facebook has really pissed off a lot of people. Lost decent amount of its earnings, right, per share. Still kind of made revenue, right? I mean, it still went up a percentage, but its overall outlook is not looking good. So what I want to mention, guys, this is going to be an extremely crucial reporting period. Okay, if retail reports a good earning period, and they will because of people's visas. All right, so that's the one thing I want to show you right now. Visa, right? Look at Visa's earnings right here. They were very good. Okay, why are Visa's earnings very good? Because people are spending money they don't have, and they're incurring a lot of interest, hence the spike. Okay, let's go MasterCard. I think I popped that in here before. Maybe I just checked it personally. So let's go MasterCard. MasterCard Incorporated. There we go. MasterCard. Earnings. Good. What does it tell us when credit card companies report great earnings? That retail is going to have great earnings because that's where the money went to, right? So did it go into Amazon? Sort of. I mean, earnings per share went up, but revenue slightly lower. But it still dropped the stock, right? Because overall outlook isn't looking good for the tech guy. The online retail. Okay, so there's that. The next important reports we want to take a look at. Costco. Okay, where the earnings report is going to be on December 8th. Okay, very important. Walmart. Earning, so Tuesday, November 15th. That is going to be a very crucial report as well. Okay, that's going to show you, as far as credit card, if it was for the retail outlet or if it wasn't for that at all. So if earnings don't beat estimates, what that means is people got into credit card debt for necessities. Okay, they didn't get into credit card debt for luxuries or frivolities this time around. Okay, so that's going to be something very key to watch for. If, and I want to reiterate that, if the retail space reports worse earnings and revenue this time around, and credit card companies reported gains, that's a sign for me showing that the rest of the sectors are going to be tanking. Okay, and that is because people no longer have disposable income due to inflation, and the stocks are going to be dropping much further. And hey, remember what I was saying? So look, November 15th, Walmart's earnings, right? It's going to be very crucial to talk about. Let's see what another one is during that time. Target. Okay, Target comes out November 16th, the day after. What's another big retail space? Like I said, Costco, but that's 2 weeks after. Let's check out, who else does earnings? When does Apple's? It already did it, okay. That's not important. Lowe's, 16th. Home Depot, 15th. So as you can see, guys, that's going to be a very important week. Okay? The 15th and the 16th of November, I believe that's when we're going to see the market finally hit its peak and start to drop. Okay, and that's the first time I actually predicted the day. Okay, before I just predict the approximate range that it's going to hit, never actually said that this is the day that I would watch for hitting a peak. Okay, and where's that going to look like here? Oof. Man, will we be able to climb 2,000 points in less than a week? Let's see. So it'll be going from here to there. Ugh. The only way I can see that happening is if we make a run like this from the first leg to the second, right? Because this from the bottom here, right, to the top, 13 days. So let's see, even 9 days, right? 9 days is a possibility. Sorry, I didn't even look to see what that was as far as gain. 9 days. So, hey, you know what? Even 8 days. No, 9 days, right? Yeah. So it was up almost 2,000 points. Okay, in 8 days. 9 days, sorry. Holy. Okay, so from Friday. Okay. Hey, you know what? All 17.6%. I mean, it's almost the exact same. Almost the exact same spike on that leg. And in the same time frame. I mean, it is possible. So guys, in 11 days, that's going to be the time. You know what? I really want to see if I'm right at this point, right? The 15th, that is going to be crucial day. Crucial day to watch. Okay, you heard it here first, guys. November 15th. Just want to see if I'm right. Okay, and Netflix is another one, right? But they've been doing pretty well. Like after they hit their bottom, that actually would have been a great time to catch it. I was just expecting it to sit there for a little bit longer. But if anybody grabbed it back in May, even near the middle of July, right, to where it's at now, 51% up. You know, went as high as 78%. So that would have been a very nice payout in the short term. As far as this goes, though, I do believe it's going to close this gap in the short term where the earnings happen, and then it's going to reverse. My other one that I really like, I do like Roku, but it's been, yeah, $35 range here first is kind of where I'm expecting it to hit before anything nice happens. Tesla, it's like a bag of sand, right? I do expect to close off this gap, though. It had positive earnings. It's just, again, there's so much bad press with Elon Musk right now. I like what he's doing, but hey, I'm not a leftist, so that's why I'm not crying about it. There's a good potential for it to climb back up to 260 this run, and I think that's going to be it, guys. Before we see this go down to maybe the 175, 150 even. It's going to be painful, but it can happen. Okay. And what was the last one? Progeny. That's what I was looking for. Progeny. Okay. I am expecting this gap to close off, but it's being very stubborn. You know, it did very well a few days ago, 45, and then it dropped down to 37. So it's kind of sitting in within its range. But like I want to say, October 13th, right? That was its low. And yeah, I mean, it came very close. It wasn't something that, what was it, 4%? Not bad. There was worse ones, right? So this was a pretty decent move. Like I said, this is me a very, very long-term pick. This is something I want to be holding for a few years, but I'm not going to be grabbing any long-term positions until the recession's over. Okay, guys? And let's do, for fun, let's just ballpark this, all right? I'm going to set a target, and I swear to you, if I get this right, I'm going to be charging for videos from now on. I don't think I'll be right, but damn, I mean, if I get that exact bottom of this entire recession before markets decide to reverse, I mean, yeah, that would be very fun. But anyway, leg 7. I do believe leg 7 will be the last, and I do believe it's going to take the longest to get there. You know, my original one was going to be right here because there could be a potential for another short move up and then going back down. But you know what? I think I'm going to take it right to that border of that red zone here, because I was saying 4 digits for a very long time. That's going to be the target before I start buying anything, right? Well, buying anything long term. So if it hits on my NASDAQ charts around 9,200, right, which on IXIC it's about 400 points less. 400, yeah, about that. I mean, you can't really say that now because this is in the negative. But anyway, so it's about 435 points less from what I remember, right? So that means we're looking at about 8,780 for NASDAQ to actually hit before we kind of reach rock bottom. And then the slow climb out of the crap hole begins. All right. So yeah, guys, that's a very long-winded prediction, but that's what I can see happening. Once that bottom is hit, this is what I can see happening in the next months to a year afterwards. Going to be this kind of thing happening, you know, just moves up and down, kind of retesting lows a little bit higher, pulling back down, sitting in a zone for a month, maybe a little higher, another zone, right? That sort of thing. The difference with this time around, though, the moves are going to be much sharper just to screw with people, okay? The last time we were in anything like this, I'm going to jump on, yeah, I'm going to go right here on the composite, actually, just to show you, right? And then we'll switch to the weekly, and zoom out. Okay, the last time, let's see, when we hit a peak and it took a long time to get out of, right? Let's use the tech bust. Okay, right there. So as you can see, we've hit lows way down here at the 1,000, and then 6 years later, I mean, we didn't go quite as low, but it was pretty rough. Right? The tech bubble was bad. But the difference is there's so much more involved in NASDAQ now than there was 20 years ago. It's not going to be a comparative crash. It's still bad, right? The difference is, again, the tech bubble, it was similar to what the automotive industry looked like at the beginning of the 1920s, right? When Henry Ford's patent kind of went public and everybody was making an internal combustion engine. I think there was over 1,000 pop-up starter companies that in the United States alone, you know, try to make their vehicles work. And how many companies can you name now that lasted, guys? Like 3, right? So you need to understand the EV fad is very similar. There's a lot of pop-ups wanting to make an electric vehicle because that's the new fad. But once all is said and done, there's only going to be a couple that are the kings. The outliers and the rest are going to fade into distant memory. Okay, same thing with the tech platforms. So much garbage came out within this time, and so many people are like, "Oh, tech, let's invest in the internet. It's going to be so awesome." Well, yeah, it is, right? But this is when, what do I want to say? MySpace. This was when MySpace was dominating the internet. Was it MySpace this time? No, I think MySpace was a little later on, wasn't it? Because Facebook crushed it later. Yeah, guys, don't quote me on this. I don't remember when these things started. You know, I'm just going based off of what I remember back in high school at this time. So, let's see. Big stuff on tech bubble. You know, internet sites keep coming out. There was all the excitement going. People wanted to just invest. And that's the penny stocks that started to climb like crazy, and then they disappeared into oblivion. Right? We're not seeing the same thing here. There's not a whole bunch of startups and pop-ups that are coming. There's no fad. This is just mitigation due to COVID, right? This crap right here caused all of this, right? Where this is all the printed money, and this is us paying for that printed money. That's all it is, right? We're going to drop. We're going to drop lower. I don't believe we're going to drop to COVID lows. Okay, but I do believe it's going to be around here for the lowest parts before we start seeing any sort of semblance of a recovery. Okay, so yeah, guys, that's kind of what I got. The the last time it actually broke through the 987 was in the housing market crash, right? But even then, it still didn't make much of a recovery from that tech, right? The 2015, it took 15 years to recover from those highs. All right, guys, so here's another thing I want to let you know at the end of this video. When you have some investment companies or bankers or all the guys that push the long-term investments, it doesn't matter when you jump in, as long as you jump in and keep feeding the beast money, you'll eventually come out on top. Sure. Tell that to the guy who invested here on February of 2020 of 2000 of March of 2000. Right? Tell that to those guys. Right? And they kept feeding money, and then it kept dropping. Can you imagine every month? Let's say you're putting in $1,000 a month, right? And that's high for a lot of people, right? But let's just say $1,000 a month. How much do you have to put in and watch this keep going down for 2 years, right? When did it hit its bottom? October of 2020 or 2002. Right, so that is nearly, well, let's make sure we draw it from the correct line. From its peak to its low, right, what do we see happening? From its peak to its low, 952 days. That is 3 years? Nope, just under 3 years. Okay, I mean, I should know, I see March and October, so yeah, 2.5 years, guys, jeez. Like I said, math, not great. So anyway, 2.5 years, and every month putting in $1,000. I don't like doing backwards compounding, but I gotta tell you, it's not gonna take a genius to realize that that would have been effing painful to watch. Okay, for 2.5 years, every time you put in $1,000, watching that lose 10%, and then 15, and then 30, and then 40. Okay, imagine putting in $60,000 and then 2 years later it's only worth 20. Even after following those rules that those investors tell you, oh, just keep doing it and you'll be fine. After 3 years of putting in money and losing it for that long, how much faith are you gonna have in those guys? Right? You're gonna have to do all of this at the same rate for the next 5 or 6 years in order to actually start seeing some sort of profit. But now, if you wait and get in here, you only have profit. You don't have the loss to worry about. So yes, it absolutely does matter which time you jump in at the market. Okay, this right now, jumping in, not the worst time, it's still not the best. Okay, and now watch, if I do the long-term fib from COVID lows to where we're sitting now, sit pretty at that 618. Like I said, I do believe it's going to go slightly lower, but we are in the golden zone. I don't think we're going to hit that 786. Somewhere within here, that's going to be the bottom, and then we'll stable out and start to slowly climb out of that hole like this right here, and it will be slow. All right, guys, that's it for this video. I apologize for all the sniffling and the coughing and all that gross stuff that you had to hear, and I apologize I made this more long-winded than it needed to be. I just hope that it's some valuable information for you, and that thinking long term, you make some good decisions in the next few months, and hopefully your portfolio looks stellar in 2024. Right? We got 1 year to make that goal. All right. Take care, guys. Thanks a lot for watching.